Hello, welcome back to Core Finance. I'm Matt Brown. This is the morning show with Tim Harrison, Head of Wealth Management at Linear Investments. Good morning, Tim.
Good morning.
Well, with no further ado, let's crack on with the market movers. The headline today, Fed and PBOC, the People's Bank of China, hike rates. ECB and Bank of England decision today. Fed pretty much expected a little bit of a shock with China hiking rates, but I think probably the Fed has got all the headlines. ECB and Bank of England today. That's the European Central Bank, not the English Cricket Board. People probably looking at the cricket score this morning. But, well, what do you make of all these kind of central banks and moves going on?
Well, I think the Fed raising rates was the markets actually would essentially have cheered the decision rather queerly. I think yesterday going into the presentation, there was a 99% chance, according to I think it was Bloomberg mentioned yesterday, of a rate hike. So it's all in line. Suggestions obviously 3 rate hikes through 2018 and over the next couple of years looking to get rates to around about the 3% level. So it would appear Janet Yellen's last hurrah. She's done what everyone expected, hoped, etc. So it'll be interesting to see how the Bank of England react to that accordingly, whether or not there is any rhetoric with regards to potentially looking to raise rates to match that. Obviously, inflation figures over the last few days in the UK having a bit higher than many would have liked. Hence, Mark Carney had to write a letter of apology. But it's a case of at the moment everything seems to be going quite well in the US. They're talking about reducing quantitative easing and getting back to normalisation with the Trump tax cuts and tax reform gathering pace and looking to get rubber stamped, in his words, as a tax cut for Christmas. It seems to be all creating very much a perfect storm of positivity over there.
And for investors, are they looking now at 2018 and saying, well, look, this bull run is probably going to continue? Could be the longest bull run that we've seen in history if we get through the summer on the upside. Are people still buying into this market?
Well, many market commentators say this is the most unloved bull run in history, which I kind of get. But then, if you look under the bonnet, so to speak, there's every reason to continue to want to own stocks. There is still a lot of money flushing around. There has been a lot of money made by investment banks, investment houses, investors, which they're going to be looking to allocate. And when the last person leaves the room, don't forget to turn the lights off. At the moment, everyone seems to be buying into the positivity. The US has stormed ahead versus the European indices this year. Most of that, is on what Trump can do, may do, will do. But again, there is appetite there. The FTSE has had an interesting couple of weeks. We sort of reached the lows of 7,300, dipped below that. We're now back at around about the 7,500. So we're kind of mid-range between the highs and the lows of the recent trading ranges. But again, if you're looking at company specifics, there are still some very good opportunities to buy and also some companies to avoid.
Well, with that in mind, let's have a look at one maybe to avoid. Sportsdirect.com, numbers out today. Actually, not too bad, but when you factor in kind of FX moves and also the rise in the debt on the balance sheet, is someone taking their eye off the ball here?
Well, how many sporting analogies can we get in there? Mike Ashley scored an own goal. Haha. I mean, if you look at the numbers, a lot of it has been they've been divesting from their stake in JD. They've been closing loss-making stores or underperforming stores, etc. So it looks as though they are getting back into a much more rigid and cost-efficient structure. Obviously, FX markets have really affected a lot of companies this year. Sportsdirect has been a name that the city does not like and hasn't done since before the IPO many years ago, because Mike Ashley is very secretive about what he does, and he's not a city champion, a figurehead that the city warms to. That being said, it's a company that's done very, very well over the years, but has Ashley and co taken their eye off the ball with regards to him potentially selling Newcastle United to PCP? Further chatter in the papers over the past few days on that, and whether or not his brother should be allowed this £11 million payout. There's a lot going on, and ultimately they've taken their eye off the ball, as I've said for the third time since I've started nattering. But again, look at the company. They are a high street presence. They are fundamentally doing quite well. But again, they were down about 10% this morning on the open. I think they're around about 6-7 now. So there may be some buying appetite there in what is a key period for retailers.
Good stuff. Let's have a look at Lonmin. What's the story with Lonmin this morning?
Another share price that's been hammered over the last couple of years on the back of commodity prices. Obviously, these guys have received an offer this morning, an all-share offer, and the board have recommended that they go run with the deal, basically suggesting that it gives the shareholder, the stakeholders, the best opportunity to realise any value. Obviously, the company has been beset with debt problems, also political risk as to where their exposure is, obviously out in South Africa, etc. But commodities have had a very good run. Their rights issues there a couple of years ago were heavily discounted. The share price has obviously improved as commodities have rebounded. But again, it's a kind of a merger of desperation that, you know, they're running out of money, so to speak. So ultimately, it's probably not a bad one to hold on to if you've got the stomach for it. But I think there's better opportunity out there.
And speaking of South Africa, let's have a look at Steinhoff. Been hitting the headlines. Obviously, the owner of the Poundland, is it?
Poundland over here, yeah.
Yes. What's going on there?
Well, I mean, what a Christmas present for Christo Weiss. I see his net worth's depleted by 72% to a mere 2.7 billion over the last couple of weeks. Obviously, the company has been on a massive acquisition run. They bought Poundland for 600 odd million and various other retailers across Europe. But it would appear that they have got some major accounting issues. They're going to have to restate their 2017 figures. Again, this morning they're coming out and saying we're actually going to have to go back to 2016 as well. So seeing further weakness in the share price this morning. So it's again, it's not a pleasant Christmas present for investors. Obviously, Investec highlighted the fact that they are an owner of, but not too badly exposed. So it's a tough one. Again, whether they can keep the banks on side with the amount of debt that they've got on the balance sheet is going to be key as to whether or not this is the name that falls by the wayside.
Good stuff. And let's have a look at the pound. Surprisingly, actually, a bit of strength in the pound.
I've got to say, I was watching the markets last night as a sad old man that I am, and I expected to see further weakness in sterling short term on the back of the parliamentary vote and also the decision to raise rates in the US.
Yes.
Both events you would have expected to have seen a decline in sterling. We haven't. So again, it would appear. Is enough with sterling weakness? Is there a real appetite that Britain, UK is going to continue to perform? The numbers suggest that may be the view of the city today.
And let's have a look at a broker upgrade, downgrade per se. Bovis Homes, broker JP Morgan, new recommendation underweight, previous recommendation neutral. Are they calling time on the house builders?
Well, you've seen a lot of insider buying and, more importantly, selling of late, the likes of Barclay Group, etc., where Pidgley has sold a huge stake, or not a huge stake, but a value-wise, a large sum of money. It's an interesting view. If you look at insider transactions over the last couple of months, and it was something we were talking about off air, the likes of your Ashteads have sold, two of the guys at the top of Ashtead sold some shares yesterday, only 25 million. The shares didn't really react too aggressively to the downside. Bovis, the new guy, came in at the helm some time ago, bought a huge chunk of shares. The shares have done very well. Are they calling the top, or are they just being slightly more conservative in what is a pretty frothy property market?
And let's have a look at the core number. Hopefully this is the amount of runs England can put on Australia, but unfortunately it's not the case. 449.
So this is one that I picked out. It's the average size of a wine glass these days, which has gone from, I believe, 230 millilitres in 1990. It's an interesting headline. It's an interesting number. Obviously, if you actually look at it, wine glasses are bigger, but it's the volume which pubs and bars are allowed to put in it is obviously the key. But as it's the festive period, let's have something a little bit fun.
Enjoy the silly season. And before then, though, economic calendar. We've already touched on the Bank of England in ECB. We've got retail sales, important retail sales for November. out of the US and in Canada. The Bank of Canada governor is speaking all about the ECB and Bank of England today there.
That's going to be lunchtime today, and then obviously just after that, the follow-on will be the retail sales in the United States. Again, it's at the moment it would appear that the appetite for gambling, risk, etc. from traders is dampening down because it is going into Christmas. Everyone's enjoying their Christmas parties and subsequent hangovers. But Mark Carney has got a pretty tough gig on with inflation increasing. You know, it's a case of if they do want to try and keep that as a core metric and try and dampen that and curb that inflation, then a rate rise might be the right thing to do. However, are the overall mechanics of the economy actually that strong, or is it purely on the basis of certain elements like fuel prices, etc.?
Good stuff. Well, in the meantime, Tim Harrison, Head of Wealth Management at Linear Investments, thank you for joining us here today on Core Finance.